So if you really want to know about your cash flow, where your money go, and give in to the temptation, understand the fundamental accounting equation. An asset increasing is a debit, an asset decreasing is a credit. The reverse is true for liabilities and equity. If you get this, then you get accounting. From the left, better from the right, better left, better right, better left, better right. Complete satisfaction, balance all of your transactions.
Okay, so there's our song one more time. And now we're going to look at exactly what it was talking about with increasing and decreasing sides of the different accounts. So we're going to start with a blank piece of paper. And this is going to be a notes page for you. Hopefully I've given you a colored piece of paper because I want it to stand out in your folder and have it so you can always refer to it. Okay, so we're going to go very big across the top with the accounting equation. Assets equals liabilities plus owner's equity. Okay, I'm going to give it a line. We're going to give it our T. Okay, now we're going to, and this whole chapter is really focusing in on the T accounts. And the T accounts are really great to remember. At any point, you can come back to a T account and really break it down into where things are supposed to be. Okay, so don't be afraid to keep it and break it down and coming back to this T account. Okay, so for any asset, okay, the T account for any asset, cash, insurance, supplies, whatever it is, is going to have a plus on the debit side and a minus on the credit side. Okay, so this is debit and this is credit. Okay, debit's on the left, credit's on the right. Okay, the increasing side of a T account, of an account, is also called the normal balance side. Okay, so you're going to hear me talk about the normal balance side. You're going to have to know what the normal balance side is, especially when it comes to actual questions like from the textbook and the tests and the quizzes and those kinds of things. Okay, so any asset has a normal balance of a debit. Okay, debits are on the left, credits are on the right. So our normal balance is always the increasing side. Okay. The other side doesn't have a name. It's just the opposite of the normal balance. Okay, there is no name for the decreasing side. Okay. Now over here, any liability ability, gotta spell it right. Okay, again, debit on the left, credit on the right. Okay, liabilities increase on the credit side, therefore they decrease on the debit side. Okay, since this is the increasing side, this is the normal balance side. Okay, for owner's equity, okay, and this could be capital as well. All right, but we have lots of other things going on over here besides just capital. Okay, debit on the left, credit on the right. That does never change. But it increases on the credit side, decreases on the debit side. So this is the normal balance side. Okay. So some of the accounts that we've looked at, assets. We've had cash is our asset, prepaid Insurance. Is an asset. Supplies are assets. And accounts receivable are assets. Those are the assets we've had so far. Okay. For liabilities, basically I told you the only one that we're going to see through this whole process is an accounts payable as a liability. And then for owner's equity, capital, the owner's capital account, sales is an actual account. Sales is revenue. Revenue increases owner's equity. Expenses and expenses decrease owner's equity. Those are things like your rent, your utilities bill, those kinds of things. And drawing. Okay. So usually we're always increasing capital, always increasing sales. Expenses decreases owner's equity, and drawing decreases owner's equity. Okay? These can vary depending on whether we're paying or buying or collecting cash or things like that. Okay, so these can change up and down, but really capital is always going to increase, sales is always going to increase, expenses is always going to decrease owner's equity, and drawing is always going to decrease owner's equity. Okay, so that's notes page number 1. All right, and then if you want, on the back of that, you can, depending on what your marker was bleeding through, if not, you can get a new blank piece of paper. Okay, and what we're going to do here is we're going to write the word acid really large down the left side of the page. Okay, and acid is going to stand for something. We're going to call it the acid test. And this helps us go through this process and figuring out where those numbers are actually going to go. Okay? So the first part, which is A, is which accounts are affected. Which accounts are affected? And that's where our A comes from. Okay, so when we look at a transaction, bought supplies on account, okay, the first thing that you need to figure out is which accounts are affected. And for right now, we're just affecting 2 accounts, pretty much. Which accounts are affected? Well, if it's going to be cash, is it going to be supplies? I've kind of asked you those questions as we've started going through some of these transactions. But that's the first thing you got to figure out. Which accounts are being affected? The next thing is, how are those accounts classified? So how is each account classified? Okay, and that means asset, liability, or owner's equity. Okay, we also might need to know if it's a revenue, or an expense. Sorry, I wish I'd have written that a little bit neater. Okay. And then the I is how each changed. How did each account change? Was it an increase? There's your I. Or a decrease? And the D is how each is entered. So is it a debit There's your D. Or is it a credit? Okay, so those are the 4 questions that you can ask yourself to determine where the number goes. What account it goes into. Is it going the left side, the right side? Is it debit? Is it a credit? Okay, is it increasing? Is it decreasing? Those are questions that you can ask yourself. That's your acid test. Okay? All right. Now, we're going to look at some of these actual accounts, okay, that we looked at here, and make the T's for them specifically. Okay? So on a sheet that you have that looks like this with the T's, the actual T's, we're going to start with, again, the equation at the top. Assets equals liabilities plus owner's equity. Okay, and I don't have my ruler here. But we're going to draw a nice line, get that T going for that whole page. Okay, so basically everything we look at over here is going to be an asset. Everything we look at over here is going to be on that right side of that equation, either a liability or an owner's equity. And so this is going to be your kind of a cheat sheet for you. Okay, so for cash, okay, what is the normal balance for cash? Okay, that's a question I might ask a lot. What's the normal balance of that? Well, normal balance is the increasing side. Okay, so we know cash increases with a debit. Okay, so it decreases with a credit. All right, so this is your normal balance side. Okay, and if you want to put in there, this is a debit, this is a credit, you can do that. Okay, I'm hoping that our little song has helped you remember that it's always left and it's always right for debits and credits. Okay, supplies. Supplies is an asset. Okay, so supplies is going to increase on the debit side, decrease on the credit side, and of course the plus side is the normal balance side. Okay, another asset that we have is prepaid insurance. Okay, it's an asset. It's going to look like all the other assets. Increase on the debit side, decrease on the credit side. Okay, and again, the last one that we have used is accounts receivable. Okay, and I am good with you abbreviating it like this, AR, A/R. Okay, you need to make a note that this is accounts receivable. You can. Okay, again, plus, debit, credit, increasing side is the normal balance side. Okay, again, this can be a cheat sheet for you as you're going through some of these transactions. All right, now, over on the right-hand side, liabilities, owner's equity. Okay, accounts payable, again, you can use an AP. This will be accounts payable. You need to remember that. Okay, now these are going to be opposite. You look back on the wall. The plus side for accounts payable is a credit. Anytime we owe somebody money, the accounts payable is always going to have a normal balance of a credit, decreasing on the debit side. Okay, capital okay, this is again where we're keeping track of what the owner has put in This is affecting owner's equity. Owner's equity has a normal balance on the credit side. Okay, which is the same thing as capital. And this is the capital account. This isn't capital like buildings and equipment. This is the owner's capital account. Okay, sales. Remember, sales is revenue. Okay, again, plus and minus. Normal balance side is a credit. And this is the terminology you need to start thinking in and talking in. Any expense and when we really start looking at account titles, we're always going to have the word expense. We're going to have rent expense, utilities expense, what other kind? Advertising expense. We're going to use the word expense on all of those, and so it'll be easy to know what that account's doing. Now remember, expenses are decreasing owner's equity. Okay, so it's going to be opposite of what owner's equity is. Okay, so we're going to plus on the debit side, and this is our normal balance side. Okay, because it decreases owner's equity. Okay, owner's drawing. This is when the owner takes cash out of the business, is also going to decrease owner's equity, and so it's also going to have that opposite plus and minus, the opposite normal balance. Okay, so owner's equity, okay, is a plus minus. So these two are opposite because they are decreasing owner's equity. Oh, let me move that up a little bit so you can see that. Okay, and again, we can put a little note out here. Decrease owner's equity, and you've got some notes, and we'll actually come back to this multiple times. Okay. All right. Now we are going to go through the working together for 2-1. So you've got your cheat sheet. Okay. This is very similar. The book, let's see, we are on page 35. It tells us it gives us a list of accounts. Okay. And so we'll need to go through and we'll need to add those account titles to all of our T's that are on the page. So we're preparing the T account. We need to label the debit and credit side. Debit's on the left, credit's on the right. Draw up arrows on the increasing side, down arrows on the decreasing side. We've been using pluses and minuses, so I'm good with just using that. And also label the normal balance side. Okay, so it's basically what we just did, but this one has some specifics with some names as well. Okay, so the first one is cash. And actually we could go through and we could label all of these first. So cash, and then accounts receivable, and again we can abbreviate accounts receivable for Sullivan Company. And you guys can change to pencil on this if you want. I probably should have. Supplies, prepaid insurance, accounts payable for Sawyer Supplies, And accounts payable for Oceanside Supplies. And Parker Vogel is our owner, comma, capital. All right. So they want us to prepare the T account. Did that. Label debit and credit side. Okay, I've got different markers, so I'm just going to go ahead and do this. Debit, credit. Debit, credit. Okay, debit's on the left, credit's on the right. Nothing changes with that. And I know I've been using this abbreviation DR, and I know CR sounds right for credit, but you wonder where DR comes from for debit. And I think it goes back to the word debitor, creditor, debitor. Okay, and that's where the DR comes from. But that's just a abbreviation that's kind of generally known for debit and credit. Okay, then draw the up and down arrows, or we can use pluses and minuses. So cash. Cash is an asset. We know that assets increase on the debit side, so we'll put the plus and the minus. Accounts receivable, that's an asset. Plus, minus. Supplies is an asset. Plus, minus. Prepaid insurance is an asset. Plus, minus. Accounts payable is a liability. Okay? So we're going to do a minus and a plus for liability. Accounts payable, minus, plus. Capital, owner's equity, normal balance on the credit side. And then they also want us to calculate or mark the normal balance. So normal balance is always the plus side. So normal balance, normal balance, normal balance, plus side, plus side, plus side, plus side. Okay, again, this can be another kind of cheat sheet for you, but this is your working together. Okay, they've got some different accounts for the on your own 2-1. So go ahead and flip over to on your own 2-1. Go through that same process. Write the title of each account on the T. Give me the debit and credit side. Give me the plus and the minus, and give me the normal balance side just by designating with an NB. Okay. And to finish. Okay. There you go.